Hi, I'm Mike Cintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. Well, sometimes the market is sort of a mixed bag, and that's what we have right now, where the major indexes are still in downtrends, but there are a ton of leading stocks that look like they want to move higher. Let's take a look at the chart first here of the S&P 500. You can see we had a 15% from top to bottom, a 15% correction in just about 4 weeks. That's very sharp off the top. And even now, after this little bounce the last few days, the S&P is actually below this long-term 200-day moving average for the moment. And it's well below both its 25 and 50-day moving averages. So either way you slice it, by our measures, the intermediate-term trend is clearly down, and even the long-term trend is in question at this point with the major indexes. Now, 9 times out of 10 in this scenario, most leading stocks would be 20% off their highs. They'd need a ton of repair work, many weeks of just rebuilding the damage. But this time around, a lot of growth stocks really resisted the damage, and actually some are pushing out to new highs right now. So we actually think you can do a little bit of buying here if you raised cash back, about a month ago when the correction really gained teeth. I mean, if you're still heavily invested, we'd probably be looking to sell some of your broken stocks in this rally. But if you got 60 or 70% cash now, doing a little bit of nibbling and some strong things, we think is prudent. Not too much, just a little bit, and then if you begin to make money, you can put more money back into the market. So what do you go about buying? Well, I can give you some ideas, but there's 2 general methods. One is to just park some money in some of the liquid leaders. An example would be Baidu, Netflix, or Apple, shown here. Apple, is it the strongest stock out there? Not necessarily, but it's it's held up very well above the 50-day moving average for the most part, just a few percent off its high. And if the market does well, Apple is going to do pretty well. I mean, if the market started going up, the indexes, and Apple was going down, I'd actually be pretty suspect of the rally. Same thing with Baidu and Netflix and some of the real liquid leaders. So to me, Apple, you could just buy some here, maybe put a stop a little bit below the 50-day moving average, and that could be, that could be an option. But the other option I want to talk about was getting pulled into the market. Okay, what that means is you want to have a list of stocks that have formed, that held up well, have formed nice trading ranges during this correction, like this is Salesforce.com CRM, and then boom, look what happens yesterday. Huge volume breakout, okay, above the 90 level. Okay, note, by the way, this had a huge volume clue on earnings, a big shakeout about a week ago when the market was bottoming. So that was kind of a clue that it had the leadership potential, confirmed by the big breakout. VMware is another example. It actually broke out last week, just as soon as the market got off its duff. So, you want to have a list of these stocks, buying them as they come through their breakout points, or, maybe the next day or two. I mean, you don't have to be Johnny on the spot. Although, right here, something like VMware, it's a little bit extended. Maybe it can pull back somewhat. So you want to have a list of stocks. What are some of these stocks? Well, CTRP, this has formed a nice 6 or 7 month consolidation. It is a little wide and loose for my taste, but if it can calm down here, maybe the market calms down as well, and then breaks out above 41 or 42, that's something to watch. Cavium Networks, this is a fast-growing chip stock. It's a little thinner, so you can see it's kind of choppy. Again, a little wide and loose. Had a little resistance yesterday, but if this can really power above 28, 28.5 on big volume, it'll probably resume its overall uptrend. F5 Networks, again, this is a good networking company, great growth. Pretty much consolidated between 64 and 74 during this whole correction, and now is just, stone's throw from new highs, so a breakout above 73.5 or 74 is certainly an option. The point is, you want to have a list of these stocks that are forming ranges that can break out, and then as they break out, you can take positions. The benefit of this isn't just, hey, you're buying leaders that can go up, that's great. It's also that, say the market rolls over here, say this isn't the start of a new uptrend, say the leading stocks are really deceiving you and they're about to roll over, well, then you're not going to buy anything. You're not going to buy much. F5 will not break out and go to 80. It will just kind of come up here and then start to fail. Okay, same thing with, say, a Chipotle Mexican Grill. It kind of broke out yesterday. If they don't work, they usually don't work quickly. And I know that can be a little tough. That's usually an early indication, if things start to break down, that the market's not healthy. So that way you're making the market show its hand. The leading stocks will pull you into the market as opposed to just throwing money in wholesale and hoping things get going. Well, that's all the time I have for today. Thanks for being here, and come by again next week for another Cabot Weekly Review.